All right, Nico. We are live after a week in this city, city of New York. We are back in action. We are
Yeah,
here,
yeah, yeah,
and
yeah, yeah.
we are finally back. Oh, there we go. There we go. Nice. How's everything going, Nico?
Yeah, awesome, awesome. I'm just good. Weather outside is great. Did some rowing this morning. Yesterday I did a decent bike tour, and I'm just to be honest, pumped up and thrilled because it has been such a long time since the two of us just
Yes,
spoke. And unfortunately, we just had to cancel the show, which we already recorded in Central Park, 4 a.m. in the morning during iGaming Next. So, we have something to catch up.
that we absolutely have, Nico. That is absolutely true. And there's been obviously, these couple of weeks that we've been away. We haven't been sleeping necessarily, but obviously we had our event, iGaming Next New York, taking place here about 2 weeks ago. And just actually finishing yesterday was CasinoBeats, which was an event that took place here in Malta as well. And so a lot of things, of course, have taken place here while we've been away. And we always joke about this, Nico, that in this industry, one normal year is like 7 years in the iGaming industry. A lot of things happen each and every week, and that's what keeps us busy, of course. But Nico, to summarize a little bit first and foremost, like what do we have in front of us today?
So today we first of all we will just speak about the iGaming Next event in New York, then just wrap things up a little bit for Casino Beats as well, and then as you already mentioned, we will just focus on the hot topics from last week, because if we would be trying to catch up the last 3 weeks, we would have a 24 hours live stream. I'm pretty sure that because the both of us, we're just looking for the margaritas, so we will just focus on some of the topics. So then,
Exactly.
there are rumors going around, or not rumors going around, because we already touched on the Kambi topic for quite often. But it seems like something is going on as the stock price just increased without any reason, to be honest. So they didn't kind of publish like awesome numbers, but something is going on there. We will talk about this. Then we will talk a little bit about the esports entertainment group. We have some insights as well. Super Group, they published their Q1 numbers, and then our agenda is packed. We have at least 7 or 8 topics, so we will just see on which of these
Yes.
topics we will be able to touch down. And once again, thanks to the audience for actually joining us. And feel free to just comment it, and we will zoom in on whatever you will comment. It's just the two of us, so Pierre and me. We are kind of experts in the area, but for sure we are not that experts like our audience. So whenever we just might get things a little bit wrong, feel free to comment on this one, right? So we're happy
Absolutely.
for any kind of feedback.
That's absolutely true, Nico. And so good morning to everyone who is joining us here today. Good morning, James. Nice to have James with us. He was leading the little run club that we did in New York the other week. It was quite exciting. And good morning, Nico, Katie as well for joining us in New York, being a good sport. Lali, and everyone else who's joining us here in the audience so far today. And before we begin here as well, just an honorary mention to our dear sponsors for making these shows possible. They are Playzone and Simpler, who are kind enough to sponsor these sessions that keeps us going each and every week. And I mean, Nico, let's jump into it. First of all, iGaming Next New York happened 2 weeks ago. We were obviously happy and lucky to have you there as well. Always nice to see you in person, Nico. And you were hosting the second day of the main track. We were hosting 3 different tracks in total. But there was obviously the main track on the main stage of the online sports betting and iGaming stage. We hosted an investor track, which was hosted by Morgan Stanley. And we hosted a metaverse track as well. So there was a lot of content going on. But what was your key takeaways, Nico? Was there anything like really interesting that you learned during this event that kind of change your perception of the industry, perhaps?
Not in the end changing the perception of the industry, but giving me the chance to actually catch up with things, right? So we talked about the tribes and how things are actually set up in the US, and that they are quite powerful in the US. Each and everybody is, as of now, keeping their fingers and toes crossed to see California actually been happening within a short period of time. We have the ballot up and running in California, and but due to the power of the tribes, the experts don't see California happening. So that was quite interesting to see this one.
Just a note on that, Nico. Sorry to interrupt you, but you're absolutely right. Like this was the sentiment in iGaming NEXT New York, that the expert did not think that this vote was going to go well. And actually, I went over to California after iGaming NEXT New York, because my sister lives over there, so I went for decompression. And lo and behold, I was watching CNN, and an advert came up from the tribes, basically lobbying against the bill that is being voted on in the midterms in November. And keep in mind, this is 6 months away from the vote taking place, and already there's like pretty heavy lobbying efforts happening from the tribes to basically strike down this ballot happening. So if this lobbying efforts are happening now, you can imagine the pressure that will be on this ballot in the month leading up to the midterms. And that's, I think, is what they alluded to, is just the tribes are just very powerful in California. But who knows? This has been the sentiment in other states as well, and anything can happen, as we know, in this industry.
Exactly. And, some of the city mayors in California, they already, bond with each other, and they are claiming that if only the tribes will get the chance to actually offer gaming and gambling in California, this could have a negative impact of $5.5 billion, because jobs wouldn't be created, taxes would decrease, etc. So there's a lot of going on in California. And as said, it was nice just to get some insights. When a discussion actually starts, people or the guys and girls on the panel, first of all, thanks for setting things up and for getting for being able to actually get the experts on that specific panels. And then you could just see how the overall discussion went on. And out of a sudden, someone just literally dropped the bomb. And out of a sudden, we were like, oh my gosh, didn't see that coming. But in the end, once the news spread, it was all good. It was all good. So that was fun to actually see how a discussion actually evolves. So it was not like this usual, like, oh, it's so nice that I'm here. Yeah, you are doing such a great job, blah, blah, blah. We literally had the chance to actually get some content. And that was just awesome, to be honest.
Absolutely. Just another quick takeaway as well, I think it's important for the audience to know, is we hosted the New York State Senator, Joseph P. Adabu, and he is essentially the state senator that championed the online sports betting bill in New York. He was the person who basically was able to put this bill into law. And he is now lobbying for the legalization of iGaming in the state of New York. So at the moment, only online sports betting is legal in the state of New York. The state of New York is a democratic state, and they have a lot of political resistance against any form of online gambling. And so even the fact that online sports betting was passed, that bill, was a big win for the Senator Adabu, then, who was kind of fighting for this bill against a lot of opposition, essentially. And we spoke to him about this as well, and he mentioned that yes, the biggest hurdle to get iGaming legalized in New York is the fact that there is a lot of political resistance. But he was very clear in saying that according to him, it is not if, but when iGaming legalizes in the state of New York.
Mhm.
And this would obviously be huge for the operators and various suppliers like Evolution, for example, who currently is only operating in a handful of states in the United States, none of which are within the big four states that a lot of people are talking about. And if iGaming would be legalized in the state of New York, online casino, it could pave the way for other states to follow suit as well, right? And so it's a very powerful statement by the state senator. Now, saying that, Morgan Stanley analyst Thomas Allen, he is a little bit more bearish on this sentiment that iGaming is coming to New York. He thinks that the political resistance is too tough. But again, the state senator, Joseph Adabu, is very confident that this is going to happen sooner or later. So that is absolutely something to keep an eye on as we move forward into the next year. So essentially, he tried to get this into the budget for this year, but he was not able to do that. So next chance will happen in 1 year's time. That will be the next time the state senators meet for to basically set the agenda for the budget, where he's then hoping to include this bill into action. So keep an eye on that as well, because that can be a game changer for operators and suppliers alike in the United States, not just New York.
Yeah. And so first of all, it was just interesting to see the guy which actually made New York happen.
Yes.
You know, after the talk, we just had the chance to actually meet and greet with him. Pretty relaxed guy,
Yes.
nice, and he felt.
And it was his birthday that day. It was his birthday when he spoke at the New York. Yeah.
Okay, we should have sung.
We were honored. Yes, we should have sang for him. Yeah.
Yeah,
we do it next year.
And what was very interesting, you know, when the question came up, okay, what about the tax rate? 51%.
Yes.
Where did this origin from? And then he was like, yeah, that was Mr. de Blasio's call. So the former mayor of New York specifically said, okay, we need to have that tax rate. Otherwise, you won't have my commitment. So then, you know, out of a sudden, we actually knew why the 51% actually, or who came up with the 51% and why it just needed to be in force. So that was interesting as well.
Absolutely. So yeah, a lot of interesting things taking place during this event, of course. But you know, overall, I think the U.S. market right now is very vibrant, but it's a question mark now when all these valuations are coming down and you know, operators are hanging a little bit in the balance and so on. You know, what is next for the U.S. Online gambling industry? You know, I think an interesting segue here, Nico, if you don't mind, is the esports entertainment group here, which essentially is a publicly traded company that is hanging in the balance at the moment. They are about to potentially go bankrupt. This is a company which has stated that the US market is where they have high hopes. And let's see if we can get here we go. Look at this. Esports Entertainment Group has lost 97% of the market cap in the last 12 months, down to a market cap of $50 million. We heard rumors here just before the show started that they are looking to do a fire sale at the moment, Esports Entertainment Group. And you know, this goes into the kind of wider economic climate at the moment, which is not favoring speculative investment, which Esports Entertainment Group was, because they were exploring this kind of very exciting opportunity, let's say, where anything esports related is very hyped, and anything iGaming industry related is also very hyped. And so kind of combining these two verticals was an interesting perspective last year. So as you can see here, if we pull this graph up again, in kind of May, June last year, the market cap was close to 300 million USD essentially, and from 300 million USD down to a market cap of 15 million. The reason for this is that they haven't been able to monetize this niche, essentially, which is esports betting. And we can see that it's putting a lot of doubt in general in the US gambling market as well. Obviously, as we all know, we've seen other valuations coming down, like DraftKings, of course, is down something like, I think, like 80% on since the high of last year as well. And the question is then how this will kind of how this will affect the kind of wider ecosystem in the United States of suppliers and operators alike. We are kind of entering bear territory, to say the least. And the question is, again, what's going to happen now as we move forward? Like, what's your thoughts here, Nico, on kind of the wider economic climate and looking at the US market specifically, as it is very speculative? Do you see there is a chance that we might see a few victims emergence here, let's say?
So before we just zoom in into the wider economic reasons, esports was esports entertainment group. Yeah. So in the end, no one as of now was able to monetize that niche, right? If you just think about esports.com, they hopes have been high. They were seen as the first actual company who tried to monetize the esports betting area. Obviously, they failed big time. So there had been rumors going around that the investors and the guys actually running the company had been bought out. Benjamin Föckersberger, one great guy, esports by heart, had to literally sign off out of a sudden. They just won during the EIG in Berlin. They just won a startup competition, and just half a year or 1 year later, they had been down, right? Nothing happened there. So it's not just an esports entertainment group thing. As of now, no one was actually able to monetize that particular niche. Seeing it a little bit broader, you just see how volatile or fragile all stocks are as of now. If you just compare this one to the greatest and latest stock prices of the Evolution Group, as soon as the first short selling report came out, their stock actually dropped by 25%, if I'm not mistaken, 25%. And this just because they have a decent business. They are doing an EBITDA margin of 70, 75, nearly 80%, which is crazy, which you don't see in any other vertical and or business as well. If you just would compare this to the automotive or telecommunication industry, they would literally chop their head, legs, and exactly. There you see the dip just before or within November. I'm pretty sure that was the time when the short selling report just came out. And they have a sustainable and reliable business. So there you just see that on the stock markets, obviously there's always room for people reacting in panic. And we should never forget, the higher the rise, the sharper the knives. So as soon as speculation just origins, then people tend to actually turn on their panic mode. Then just seeing this in a broader or wider perspective as well. If we just take a look at the German stock exchange, so the 30 most valuable stocks in Germany, and if you just compare, their revenues and their level of debts. So Deutsche Telekom, one of the leading brands, as soon as the interest rate would increase, which will now take place by 2 or 3%, they are in big trouble, as they have debts of about 120 billion euros. So as soon as they need to, take a bigger portion of their revenues to pay off the existing debts, this might cause issues, to be honest, which we don't want to see as of now. So I'm pretty bearish on this one. So as soon as the interest rate will significantly increase, which the Fed from the US already did, and the European Central Bank are just about to adjust their interest rate as well. So this might just cause issues which wouldn't be that good, to be honest.
Yeah, the economists are speculating about a stagflation now, essentially, which is, I guess, in layman terms, it would be like a double recession, you could call, because it's basically a recession from two angles, which is the fact that the definition of stagflation would be something like it would be something like growth slows, demand goes down, unemployment rises. So this is like a traditional recession. Basically, economy slows down, economy shrinks. But a stagflation is essentially this happens at the same time as inflation increases. So you have essentially a shrinking economy and rising inflation. So it's two things happening at once. It's like a perfect storm, which economists for decades thought it was impossible, because it's a contradictory term, because if the economy shrinks, then per definition the inflation should shrink as well, because the purchasing power goes down and so on and so forth. But this is a phenomenon because obviously inflation rates because the interest rates has been so low, and they are already at zero, and the inflation is obviously ticking upwards. So it's not the most promising climate at the moment from a macro level. But we can I also just want to put up another indicative kind of graph here as well, which is the Roundhill Sports Betting and iGaming ETF. So this is essentially an ETF which encompasses iGaming and online gambling companies. So it's basically a measuring stick for the iGaming and online sports betting industry. This encompasses companies like DraftKings, like Kindred, and so on and so forth. It's an ETF basically. And here we can see since the peak of November that the industry, you could say, have shrunk by 47%. Again, this is also taken into account that the industry, the speculation has always been that the iGaming industry is recession-proof. We saw that in 2008, where the online gambling industry was performing quite well, although there wasn't that many publicly traded companies at that time. But we know, obviously, I was in the industry at that time, and it wasn't affected that bad. So the question is, with the industry here shrinking 47% market cap overall, the question is if the inflation keeps increasing, if we start seeing a drawback of the economy, how the industry will be performing. Companies like Evolution, Betson, DraftKings, and so on, will they lose revenue, or will they be able to kind of tick along as usual? What do you think here, Nico? Do you have any theory?
So one important thing which you just mentioned, so it's not the overall industry shrinking, it's the market cap or the price to actually buy into the company. Because if we just see the revenues of our industry, I don't think that revenues just decreased by 40%. We just opened up New York.
That's a good point.
Handle was crazy or is still crazy in New York, but, and
it's
that's a big
cap.
but.
Yeah,
exactly. That's a big but. If we just for last month, and correct me if I'm wrong, overall handle was around 1.3, 1.4 billion US dollars. Then you just paying the taxes. But for the operators, they just gained revenues of 55 million US dollars. There you just see that out of a crazy handle, which is the biggest handle we see on Earth, to be honest, on a time span of 1 month, the operators don't make that much money. And this is then just reflected, like even the BetMGA, they are like, okay, we will not spend further marketing money in New York due to the irrational tax rate. So we just need to, take a lot of variables into the equation. So revenue or expectations of prices of the companies going up. I don't think that prices of companies will go up any further. We will just see bigger fish eating smaller fish, so the M&A activities will increase a lot. Probably we will just talk about Fox aiming for FanDuel, as they have an ongoing lawsuit as well. But getting back to your question, I'm pretty sure that our industry is still pretty recession proof, as people actually tend to shift their existing money, also if it's just little, for the chance to actually win big. So that's why our industry will be one of the leading industries during a recession.
Absolutely, that's a very good point, Nico, and obviously we'll see how this turns out during the rest of the year. And I mean, you talk about the M&A, and I think that's a really good point. Is that the economic climate and the difficulty in raising capital will force M&A activity, essentially. So imagine a company like DraftKings now with a $6 billion market cap, very cash hungry. The ability to raise capital is much more difficult for DraftKings now than it was a year ago when they were boasting a $20 billion market cap. And so these cash hungry businesses may be forced to consider M&A activity. And like on that note, we I don't know if you've seen, but this week something very interesting happened on the stock market in regards to Kambi. I'm going to show a graph here on the screen, which is very interesting. Okay, this is from Eilers and Kirkets, is an analyst firm. They just made a note here early in the week that Kambi, for some reason in the last month, have kind of been defying gravity on the stock market. They are up 25% in the last month, while other similar competitors are down quite significantly. So they are seemingly defying gravity here for no apparent reason. There hasn't been any major news that has alluded to why this would happen. But the immediate speculation, of course, becomes that is there a transaction basically taking place that have leaked out essentially to those in the know. And I've been following kind of the retail discussions in Discord and on Twitter, and there's been a lot of speculation that kind of like the people in Malta, like the professionals in Malta, that this somehow had leaked out to like the Maltese iGaming community. And so people are kind of keeping an eye on. They're like asking people who are in the know in Malta, like, oh, do you know anything? And people have reached out to me as well, asking like, oh, have you heard anything about Kambi being bought and so on? And the answer from my side is no. Like I haven't really heard anything, but it's equally fun to speculate still, right? And again, I'm going to show another little analysis here from Eilers and Kirkets, who put together basically who could be potential suitors if Kambi would be bought. And they put up basically 6 potential outcomes here of an acquisition if Kambi would be acquired. And I think it would be interesting to just have a short discussion here, Nico. What do you think is the likeliest outcome here? So the 6 bullet points that Eilish and Kirkett outlines here is, first of all, Kambi could be acquired by private equity. So a private company buys Kambi essentially for revenue. That would be no strategic kind of decision other than just to that is a good financial transaction. Secondly, it could be aristocrats. Obviously, they tried to acquire Playtech earlier in the year, but it was rejected. Aristocrat lacks a B2B sports betting capabilities, so this could be the solution. Third point is Kindred. I must say I don't think this is very likely because Kindred has been very clear in their strategy that they're building their own internal sportsbook, but nonetheless, they are mentioned here. It's interesting. Obviously, Kindred and Kambi have very close ties, so obviously worth thinking. And then my personal favorite, okay, I'm gonna commit myself to this, is if Kambi would be acquired, it would be by Las Vegas Sands. Why? Because Las Vegas Sands is the biggest gambling company in the world, and they have outlined a very specific strategy for their online venture, which is essentially that they want to not go into online gambling as a B2C, as an operator. They want to invest in B2B companies because that's where the profits are to be made. Las Vegas Sands feels that the B2C part of the business is still too speculative to dabble in, and so they are looking to acquire B2B companies. And what other company than Kambi would be more suited in this market? I think it's a perfect match for Las Vegas Sands, and they would obviously be able to kind of accelerate the business in the United States, specifically based on the position they have in the market there. So I think personally that if there would be an acquisition happening, I would bet on Las Vegas Sands. We also have the speculation if it's on potential operators, so Fanatics, Rush Street, or Disney. Or a really interesting speculation here, which is FTX that tried to acquire PlayUp early in the year. However, PlayUp was an operator, and FTX and Kambi obviously is a supplier. But Nico, what do you think? What's your hot take? Can you tell us, please?
Yeah. So first of all, I've just sent you a link. So if you just manage to come up with that link or the graphics as well, because if we just take a look at the volume of the stocks of Kambi, there you just see a little bit of a hockey stick in February, at the 9th of February, where the stocks out of a sudden, the volume had been 2.5 million stocks, which had been traded on one day. Usually they have like 150, 250,000 stocks traded on a daily basis. If this is exceeded by 10 times, you just see, okay, something is happening here. And this was at the 9th of February. And there you just see that also the price went up as well. So as you mentioned, LVS, Las Vegas Sands, they are not specifically just aiming for B2B operators. They already bought into B2B operators as well. With their last acquisition, it's the StreamLayers video engagement operating system, short it's VIOS, which they did in beginning of May. So that's why Kambi for sure would be something they are interested in as well. As of now, they are looking for considering Kambi named as one of the smaller companies, which they for sure are not, but they are not on the same level as Evolution with a market cap of 20 billion. So that's why LVS probably is looking for these as well.
Yes,
I would have.
So just to interrupt here, I think Rick has a very interesting proposal here as well, which is BetMGM could potentially acquire Kambi as well. Correct me if I am wrong here, but doesn't Leo Vegas have their proprietary sportsbook? It'd be interesting if the chat can verify this, perhaps. If anyone is in the know, it would be great to ask Carolina Pelk actually about this. But if I remember correctly, and I could be wrong here, so don't take my word for it, but if I remember correctly, Leo Vegas has already their own proprietary sportsbook, and obviously MGM just acquired Leo Vegas. But I could be wrong here, but I just have a memory that they do. In that case, it wouldn't be so relevant for MGM to buy Kambi. But if not, then yes, it's a very interesting speculation.
So they have they used to buy their sports book from Kambi, Leo Vegas. They have their own casino platform, and that's why BetMGM bought into the technology of exactly. Leo is Kambi for sports betting. There you go. Thanks, Jake, for backing me up here on this one as well. And as said, BetMGM bought into Leo Vegas for their casino platform, but they already touched down. They already knocked on the door. They are standing in the door of Kambi with their Leo Vegas acquisition, and maybe they would just buy the technology as well, and starting things off there once again. So good guess. If we wouldn't have already, released the news of DAZN cooperating with Pragmatic, DAZN would be in the race for Kambi as well. We're having this discussion quite often, or used to have it quite often. There are some companies which might be acquired. Kambi was always one of the targets we actually mentioned when touching down on that topic as well. And it seems like something is going to happen, as said, which already started by beginning of February. So someone just, aligned or made the first step, to be honest.
Yes, it is. And also something worth pointing out. I mean, it's fun to speculate. You know what I mean? It's really interesting to speculate. The share price is up, like I said, around about 25% in the last month. But it's also worth noting if we zoom out a little bit longer. I'm gonna take another screenshot here, and we can zoom out a little bit so we see longer than a month here as well. Just hold on 1 second, Nico, and I'm gonna bring this up to the screen. Because if we zoom out a bit longer, we can actually see that Kambi is recovering from a bit of a dip. So this is the last 6 months, and we can see here the obviously the increase. They are actually up 35% now since the dip here in May. But actually, if we zoom out to April, they are more or less break even on the stock market. So the argument against this kind of assumption that there is an acquisition happening is that they are just kind of getting back from this dip that happened back in April and beginning of May. So it's also worth to just kind of show both sides of the coin here. That yes, they have been defying gravity in the last month, and it is a bit odd what is taking place at the moment. And there is a lot of speculation and probably a lot of retail investors who are buying into this belief that the company is being bought. But again, you can see both sides of the coin here. It's definitely not a fixed thing that is definitely taking place here. So, but speculation is always fun, and especially considering the news that broke a couple of months ago, the fact that the fact that Kambi has been kind of released from the shackles of Kindred, and they can now be acquired, which basically is, spurs on this speculation. And thank you guys again for in the chat here for correcting us. It's that's why we have you guys here as well. If we make a mistake, you guys are here to correct us. So good to point out that Leo is on Kambi already. So yeah, it'd be interesting to hear just what the chat thinks. Again, bringing up this screen. I mean, Rick Surd, he mentioned here that he thinks that the BetMGM will acquire Kambi. I am committing myself to Las Vegas Sands. It'd be interesting to hear what Jake, obviously our managing editor, you are very much in the know, and just other people in the chat as well, if you want to chime in with some speculation as well, like if Kambi would be acquired, which company would be the most likely to acquire them? It'd be interesting to hear that as well. But in the meantime, I think, Nico, if we jump over a little bit to another short story here, continuing on like the bearish sentiment. I feel like we are a little bit like the Grinch here today. It's a lot of negative news on the stock market specifically. But Super Group, as in with the most famous brand with Betway, they also published a quarterly report here the other week. And I'm just going to show another really sad graph here on the screen, which is that Super Group lost 32.5% of their market cap after the quarterly report was released. And the reason for that is, if we take a look at this little graph here, this is essentially the revenue that they publish each and every quarter. If we look at the bottom number here, the adjusted EBITDA, we can see that there's been a drawback for the last 2 quarters. They are decreasing in EBITDA, and the next quarter will be a very tough comparative. We can see in Q2 21, they published an adjusted EBITDA result of 84 million pound, I believe. No, 84 million euro. And this is comparative to 65 million in the previous quarter. And so basically what Super Group have communicated is that they are not going to meet the expected revenue that they have published in their previous forecast. They are not going to be able to meet the revenue expectations for the year of 2022. And those words by the CEO basically caused this 32% drawback on the stock market. So yeah, not the most fun times right now to be an investor in the gambling industry. But again, this industry is resilient, and this likely is a temporary drawback, in my opinion, at least. What do you make of this, Nico?
So if you just compare the Q1 numbers 2022 to the Q1 numbers 2021, if I'm not mistaken, the adjusted EBITDA was 63 million euros. So based on the graphics you just pointed out, and the adjusted EBIT, exactly, there you go, 63 for Q1 2022, and the adjusted EBITDA for Q1 21 was 65. So 63 versus 65, there ain't that much of a difference, and for sure not an underlying argument for a drop of 32% in the stock price. So there you just see how volatile, as said, when we just opened up the overall live stream as well, how volatile the stocks seem to be. But it ain't a gaming industry related problem. As soon as there are any literally news which don't emphasize, like, okay, revenues are up, EBITDA is up, we're exceeding like the wildest dreams, anything else will always, or literally always, cause a decrease in the stock price
Yes.
as well. So
yeah, and have a look at this graph here. This is essentially Jake, our managing editor here, was really good at putting this together. This is essentially a comparative breakdown on demographics in Super Group and the revenue Q1 21 versus Q1 22. And talking about revenue diversification, that is something Super Group has been an absolute champion at. Because they are not reliant on the European market, even though they are a traditional European operator, which is very impressive. So you can see here that the European market is just a minority, essentially, of the total revenue, where Africa and the Middle East is a much larger market. Asia Pacific, much larger. North America, which is predominantly Canada, is a much larger market as well, obviously a huge market for Super Group. They have been very good at diversifying the revenue, and that is kind of the bull case for Supergroup as we go into a kind of more challenging headwinds in the European market with the upcoming re-regulation in the UK, and a lot of headwinds in general in the European market. It's good to see as an investor that a company like Supergroup is not standing and falling on the difficult European market here. So that's just worth pointing out as well. Always good to point out both sides of the coin. And just jumping over a little bit, zigzagging here, Jake, going back here to the acquisition of Kambi, Jake points out that Aristocrat would be in a lot of people's crosshairs as the most likely suitor to acquire Kambi, just because they managed to raise $800 million in order to acquire Playtech. That bid obviously failed. So now they have a lot of cash on hand that is kind of gathering dust. And again, inflation means that this $800 million will basically be eaten away as inflation increases. So you would assume that Aristocrat will want to do something about this and not hold too much cash on hand at the moment. So that's just an interesting insight here from Jake as well. Thank you for pointing that out as well. And Nico, speaking of potential companies to be acquired, we obviously saw Leo Vegas. We talked about this earlier. Leo Vegas being acquired by MGN a couple of weeks ago, and that has led to speculation who could be next of the traditional European and Scandinavian online gambling brands, and specifically Betsson and Kindred. And I would say especially Kindred if we zoom into one company, because some of the major shareholders have actually been kind of pushing for Kindred to be acquired. They feel that this is the right time right now for Kindred to go through a sale. And so I just wanted to kind of raise the question here as we are having this nice friendly conversation. Who do we think is the most likely suitor to acquire a company like Kindred or Betsson for that matter? Is there anyone that comes to mind to you, Nico, would you say?
It's to be honest, it's always the same names, right? It's always the same names. I'm pretty sure someone with deep pockets. And as we have already seen, like Caesars buying into William Hill just for the technology, getting rid or reselling all the bet shops in the UK, roughly 1,500 bet shops to 888. So it's one of the big operators in the US based, and as you already mentioned, Las Vegas Sands. They are always in the race for acquiring something in Europe. Although I might be pretty much all by myself on this one. I'm just sure that Las Vegas Sands, they're also eyeing on evolution as well. Right, so it's the biggest fish out there, and probably this will happen. So fingers crossed also for Todd that he will be able to just sell his stocks big time and sail off the sunset in Malta.
Yes, let's see. I'm gonna throw out just speaking of the operators, going back to Kindred and Betsson. I'm gonna throw out the dark horse, but I think this dark horse make a lot of sense because the crypto exchange FTX, which obviously has a massive market cap, they were rumored to try to acquire PlayUp here last year, and this deal crashed and burned. This was one of the biggest stories of last year. Is the fact that there is an ongoing lawsuit happening at the moment with the former CEO of PlayUp, Dr. Laila Mintas, who basically was accused by PlayUp of sabotaging the potential deal between PlayUp and FTX. This was a $450 million acquisition, if I remember correctly. That basically fell apart, and after these accusations, then Laila Mintas came out very aggressively saying that it was not at all true that she had been sabotaging the deal. She had no incentive doing so. She was a shareholder in PlayUp as well. and
The
obviously
biggest
would
shareholder.
have
The biggest shareholder.
and obviously would have profited from this acquisition taking place. And instead, PlayUp is kind of facing potential collapse as well, due to the fact that they were not able to go through with this acquisition. So long story short, or a long point short here, I think FTX is a very interesting suitor to acquire a company like Kindred, who is active in the US market and many other markets globally as well, since they have already shown interest in acquiring an operator. I think FTX is a very, very interesting speculation here, actually. But we should not discount the fact as well that we have Fanatics. Obviously, they are looking to acquire an operator. This is already clear. They have gotten the what's called the Bet Fanatics trademark. It's already filed. Everyone is just waiting for which company Fanatics will acquire, and I think Kindred is an excellent opportunity here. You could also make the argument that Fanatics is big enough to acquire DraftKings at this stage, so that's another interesting thing to keep in to look at as well. But we should probably see an acquisition happening quite soon, I would imagine, which is quite interesting to see who it will be. And on another note as well, we have Disney, of course, who potentially is also looking to acquire an operator on the sports betting side. Obviously, Kindred is very sports betting heavy, and if ESPN, which is under Disney, would decide to push the button and start a sports betting brand with the incredible license deals that they have in the US sports scene, then Kindred would be a good suitor there as well, of course, I think. So yeah, some interesting notes there. I still have this bet that I have to eat up my sock, because I committed myself that I thought Kindred was going to be acquired last year, and I said if they are not acquired, I have to eat my sock. I still have to live up to that bet. I'm not someone who doesn't live up to bet, but we'll have to take that a little bit when it comes that that outcome. But in any case, let's see, if Kindred is imminently to be acquired. But there's from one thing to the other, there's also another Scandinavian gambling company who have been rushing a little bit on the stock market here in the last couple of weeks, which is Catena Media, who was also pointed out as a company that could be acquired as well. Now, funnily enough, just a couple of days ago, news emerged that actually Catena Media is looking to offload the flagship brand within the group, which is As Gamblers, in order to focus even heavier on the American market. And so not exactly a sale of the company Catena Media, but As Gamblers is obviously the biggest brand within the group of Catena Media. And so this is quite interesting as well. I find that they are essentially offloading this brand to focus more heavily on the North American market, at the same time as the operators have communicated that they, within a couple of years, are going to decrease the marketing spend. And obviously, the North American operators are not reliant on affiliates to the same extent as the European operators are. So, Nico, not to throw you here in the deep end, but what do you think? What do you make of this strategy by Catena Media to offload the flagship brand in order to focus more heavily on the North American market?
So first of all, and just remembering when we began this episode of today, having the words of Joseph Adebu in mind, that iGaming in New York will come. It's only a matter of when. And then I'm like, okay, but why should Catena Media offload their As Gamblers brand, which is mainly focusing on iGaming? So from my perspective, doesn't make that much sense if we just see New York happening within not a very long period of time as of now, or of course they are offloading their biggest fish to get in fresh money. So as you mentioned, there are always rumors going around. Catena Media, in the M&A race, being bought by Better Collective, which we should never leave out of the equation as soon as it comes to affiliates and the affiliates world. So I'm pretty sure if they offload their flagship as gamblers, I'm pretty sure they are seeking for new money, which they want to invest. And then it's like, okay, but what are the strategic partners they might be interested in to buy? Is it something in the Canadian market they are eyeing on, where as of now the prices are crazy? Probably they are already eyeing on the South American market. Maybe they are eyeing on the Asian market, India market as well. So I'm pretty sure they will just reinvest their money in one of the upcoming and bigger states. Also in Argentina, the area of Cordoba, they just are about to legalize sports betting as well. We are speaking about 3.5 million possible customers as well. So will be interesting. But I'm pretty sure they are not just eyeing on the North American market, but rather on the South American and Asian market as well.
Yes, and I have a theory here why they are offloading the Ask Gamblers brand, and I think it's quite simple, really, because Catena Media is a publicly traded company, and they, especially being an affiliate as a publicly traded company, they have to be careful from where they derive revenue. There are many affiliates that are focusing on kind of dark gray, and black markets. But obviously, Catena Media, as a publicly traded company, will have to be careful in operating in those markets directly, and obviously refrain from generating revenue from those types of markets. Now, a private affiliate doesn't have those restraints, so to say. And I think this is a case of like a private affiliate can probably utilize the brand of Ask Gamblers much more than Catena Media can. And so offloading the brand to a quite high valuation, because this is a valuable brand, of course, can be a good strategic decision for Catena Media, because they aren't able to maximize revenue from that brand just due to the fact that they are a publicly traded company. And the strategy, again, is very much focused on the US market, very much focused on regulated markets. And that's what they have to do as a publicly traded company. It's not easy being a publicly traded affiliate when there are so many, when kind of the traditional affiliates are often deriving revenue from questionable markets, so to say. Much more difficult to maximize revenue from those brands. So I think it's as simple as that, really. That also kind of plays into the strategy again, that they have this US focus. So I would just say that is probably the reason. I've heard as well through the grapevines that although the public the statement is that maybe we will offload it, maybe we won't. We are considering different opportunities here. We'll see what happens, kind of thing. They were very vague in the statement in the quarterly report. But what I'm hearing is that they are definitely looking to offload the brand. So it's just a matter of finding the right buyer to the right price, right? They are not. They don't want to come across as desperate, I suppose, through the public communication. So let's see who's going to buy it. But I will almost commit myself. I'm not gonna make any stupid bets to eat another sock or anything. But
or your head.
I would always almost promise that it's going to be a private affiliate, a private company that will buy Ask Gamblers, just for this reason. Well, I'm not going to commit myself fully, but that's my theory. Nico, the hour is up. Crazy how time flies, huh? It's been a very, very fun hour together here. I was thinking as well to mention before we stop today. I mean, we don't have that much time to talk about this as well, but we talk a lot about that the iGaming industry has had a tough time this week or recently. But I just want to show a graph here to show that at least we are not Luna, because talk about having a tough time as an investor. This is basically a chart of a crypto currency called Terra Luna. So basically Luna, which is connected to a stable coin. So for those of you who don't know, like if you want to operate within the blockchain and outside of kind of the fiat currency, but you don't want to have the volatility that Bitcoin and Ethereum brings, then you will buy a stable coin. So these stable coins are usually tied to the US dollar. So if you buy 100 USDT, then for example, which is a stable coin, then they will always be worth $100. They are pegged to the US dollar. Now, this has become very popular in the last year to use stable coins, but there's been speculation, like in uncertain times, like are these stable coins safe? And we saw an absolutely enormous collapse here the other week from Luna, which is tied then to a stable coin, which basically had a $40 billion market cap, as you can see here in the graph, 40 billion, and overnight it collapsed down to $0.8 billion market cap. And so basically a drawback of 98% in total. So nearly 40 billion, 98% of the total market cap were wiped out overnight in the stablecoin due to the volatility and too complex factors for me to explain in this little podcast. But I just wanted to kind of finish this episode today saying that at least we are not involved in the Luna disaster that happened on the crypto side of the fence here the other week, which then caused the rest of the crypto industry as well to collapse here as well, which is obviously Ethereum down 40% over the last month, Bitcoin down 25%, and it's just a very bearish sentiment at the moment. So yeah, at least we are not crypto.
Yeah, but putting this into perspective as well, if we're just speaking about the gaming industry, which for sure hasn't the best kind of perception, right? It's stigmatized, right? The betting industry, then of course crypto is stigmatized as well. But even the big tech companies like Facebook, they're having tough times as well, right? If I'm not mistaken, they just wiped out 30%, 32%. They even stopped hiring people for their most prestigious projects as well, which is I don't know the name by heart, but where they're kind of exploring like the metaverse and which would be next, etc. So not just bind to the kind of globally seen stigmatized verticals or industries, is also happening for the tech industries and the big players there as well. So as said, it's not just crypto, it's not just gaming, it's also the tech companies as well. And as said, they just literally, Facebook stopped hiring people for their most prestigious projects as well.
Yes, absolutely. I mean, the tech industry overall has been a bit of a disaster here in the last couple of months. Facebook is down 44% since the start of the year.
Yeah.
So basically a drawback due to the changes in Apple's privacy policy that drove down revenue in Facebook. But that's a topic for another day. Nico, it's been an absolute pleasure to be back here on the weekly chats. It's been so nice to kind of update ourselves here on what's happening in the gambling industry and beyond. I think it's interesting to talk about the more wider climate as well here to understand the iGaming industry as well and how it all kind of joins together and how these macro climates and other industries affects our industry as well. I think it's very, very interesting. And so I hope as well that the audience have enjoyed today. I certainly have. And Nico, what do you say? I mean, now it's actually beach weather. It's 30 degrees here in Malta. What do you say? Shall we jump
Indeed.
over and have a little
Yes, we
pina
will.
colada on the beach here?
Yes. We will. And once again, shout out to the audience as well. It's cool that you actually, question what we're talking about and just kind of give your own notes and your own comments as well. And this is what the hour actually is for, right? It's not like just the two of us, the dynamic duo sitting here on the well-seated chairs and giving some insights and thinking like we know it all, which we for sure don't. And that's why we highly appreciate all the comments, and we're happy to share them as well. So thank you, and shout out to the audience as well.
All right. Sayonara, adios, hey do, goodbye, auf Wiedersehen, and we see you next week. Thank you so much, everyone. Have a good week.
Okay.